Hey, what's up, fellow traders? I hope you guys had a good hump day. And I am back with another question for you. This is one that I got today, and I want to share it with you because I feel my answer is very, very important. And it's what is the most important lesson a day trader will need to learn? Now, I'm speaking specifically on day trading. Doesn't matter what you trade, whether it's futures, stocks, options, doesn't matter. What is the most important lesson that a day trader will need to learn? So I'm gonna let you think about that for a minute, um, for a quick second. I'm not gonna go into this. I went through it in the last video. If you want more information, you can go back and look at it. But Trade Day is who I recommend for brand new traders getting into the futures game, working with prop firms. This is one that has a good reputation. Same day, day one payouts when you make it to the funding. You can trade multiple accounts now, and the eval is just 5 days. So yeah, when you're just getting started, I recommend you going through the eval process because you'll be blowing a lot of money going straight to funded if you don't have this down. It's, trading with prop firms is unique. It's good. It's beneficial, but it is unique, and you have to understand what you're doing in order to get there. But you can use discount code AJT66, or the direct link will be in the description of this video. It's 30% off. No activation fee, meaning when you pass the eval, there's no fee for you to go into a funding account. The reason why I like these guys is because you can pick your poison. Probably the number one reason most prop firm traders lose their profit paying accounts when they get there, especially with Take Profit Trader. The hard part was you going from an end of day drawdown to an intraday drawdown. And I've seen a lot of traders actually lose their accounts and still be positive. They're up $500-600, but they lose their accounts because the intraday drawdown got them. And here in Trade Day, you can pick end of day drawdown, and you won't have to worry about that. So if you have any questions, shoot me an email, ed at tradingperformancespecialist.com, or my email is going to be on the description of this video, or you can send me a message here. All right, so let's go back. What's the most important lesson or perspective? I'm going to say prospective day trader will need to learn, because you're a prospective day trader until you start making profits. And I know the most popular answer is going to be risk management, but it actually goes deeper than that. Okay, what you need to learn when not to trade. Okay, think about it. Most of the time you spend in the market is looking and waiting for setups, right? I mean, that takes up more of your time. The actual trading that you do takes up maybe 25% of your time that you spend in the market. So understanding when not to trade, even if you're a scalper, is mandatory to your success as a day trader. Okay, and it's actually the hardest lesson for me or any educator to teach. It's impossible to teach it using dead charts. I mean, we could try to point out traps and things like that. Try to give examples, and I'll give you an example of that. But it must be taught live. As I said in my previous video, you have to be able to read the price action and understand what it's telling you, so you have a better idea of what's coming next. Okay, and my whole purpose, my whole purpose in doing the mentoring like I do it, to where we spend several hours in a trade session, is to help you operate in this trading space like you've never operated before. You know, that you're able to see things from a different perspective, that you've never seen it before, and that's going to give you clarity on what's happening and why it's happening. That's the main thing. So what I share with you in our mentor sessions can fuel the rest of your trading career. That's what it's designed to do. You know, as a teacher, I'm always evaluating what I do, how I do it, and I realized what I was doing was leaving people at a place where they needed more. They needed more live individual instruction in order to get to where they need to be. Now, not every, some people are lucky. They afforded, they were able to spend enough money to do it till they, couldn't figure it out, or till they figured it out. But most people don't have that luxury. And so you have to learn this. Like I said, it's the hardest for me to teach, but once these guys get it, they got it. All right. So I'm kind of behind here. All right. So let's take a look at this. And here's what I'm talking about. All right. If you look at this scenario right here. Okay. Here's a daily pivot. We all know that daily pivots are, they do hold some significance. Now, yeah, you can get some volatility, and it could just sail through it like it's not there. But I guarantee you, it's coming back. I guarantee you, it's going to come back and talk to this level again, just as we see here. So you can be aggressive and take this entry, but you have to be prepared, and you have to understand that this is the level. This is the level of resistance that you're going to have to base the trade off of. So if it goes down and pops right back up and you take it off, you're wasting your time. You are wasting your time. Now, you get in a scenario like this. You don't get this trade. You wait for it to bounce and retest. So here, look at this candle. We have resist support down here, and we're running into resistance here, like we know. So this candle opens, it pushes up, it touches this. So as it comes back, yeah, you can take an aggressive entry and you could get in. You've got a window here. Okay, you've got a window of opportunity. But if you didn't trade this, if you looked at this candlestick and you was like, this gives me pause, which it would give me pause. Here, I would not have taken this trade, but he took it. It ended up bailing out because it started coming back up real quick. Okay, now look at the candlesticks. There's no way I would get into this while we're getting chopped like this. Now, we see this on the chart. The point I want to make here is that we can't trade based on information that's already happened. We can't take a trade and say, okay, I see how this is going to work out now, so I'll go ahead and get in and just hold it. No, you have to be able to identify what's happening while it's happening and determine, is this an ideal scenario for me to get in? Now, if you sit back and look at this, you can see you've got, kind of a little, inverted flag forming, which is telling you it's likely to go short. But you have to use these candlesticks, the formation, to kind of give you an idea of what's happening. All right, so what we did, now this is from a trader that just sent me snapshots. So what we did, the trader I was working with, we never traded all of this. We waited, and this was a pretty solid candle here. We had a little dip down here, which kind of coincided with this, but it got bought back up. Here, it wicked a little bit, but we closed again, right back around where these other candles are closed. What does that tell us? That there's some serious resistance up here, and this thing is having trouble. So when this candle opened and started to sell, that was our sign. That was our sign to get in. And it's not just looking at this chart. It's reading the price action and understanding what's happening. And looking at the 1 minute chart, the 1 minute chart told us what was happening in here, which kept us from getting in the trade. But I could not teach this. Could not teach this on a dead chart, because you have to be able to learn how to recognize this as it is forming. All right, let's go here. This is what it looked like right here. We were waiting. We were stuck here on R1. Here's the daily pivot. This was resistance, but the whole time we're stuck here on R1. You don't want to trade above R1, but when you get down and you're getting in the trade down here, you have to read the price action. Even though it's real choppy here, you have to wait and see what it does over R1. And the whole time, and if you looked at the 1 minute chart, which he doesn't have, you would see all of this, and it's telling you don't get in. Don't get in. And this is the point that I'm making. Why you really need to work. It doesn't have to be me, but you need to work with somebody that's going to teach you and help you stay out of these traps, or not necessarily traps. These are just normal price action where you could get chopped up if you don't really understand what you're doing. All right, so let's take a look at, let me get this out the way. Let's take a look at what's happening today. And real quick, I'm going to go through, what we looked at last night. So last night, what we did, we kind of waited. Here's the opening range high, 5 minute opening range high, which I always mark. And then we had 5 minute opening range low. And I'm gonna make this red so we don't, to help us understand. All right, so we've got this. So right now, you could see, here's the 50 period moving average. We're kind of sitting on that 50 period, but we're not going anywhere. We're not really going anywhere. We're pulling back. We're just kind of chopping around. We don't want this. We don't want to trade in all this. This can chop you up. This can cause you to, give money away if you made any. And when that happens, that's when you start to lose control. And that's when you get upset and things start to not not end well for you. So all of this and what I said and what we decided on last night was we were not going to trade inside here. Even though it did give us some good opportunity, this was a good trade here. If you traded the 5 minute opening range, when it broke it, this would have been a good trade. And then here's another, this would have tested your patience a little bit. But here again, here's that same, remember we saw the inverted flag or pennant? This is not inverted, but this is like giving you 100% that we're going higher. Okay, so we were looking at this and we're like, look, when it takes out this, we're going to go. Okay, so this was our entry here. This was our entry here. We took some profit at R3. And we were kind of looking for R4, but 4100 was kind of where we got the last part. But you could see we kind of stayed out of this. And when we got in here, this was a really, really smooth trade. So we didn't take any more trades in this because, look at it. It was just chopping around and all of that. So what we did, we identified this. We identified this and we drew a channel to look. This is where we need to stay out. This is where we need to stay out. And then when it breaks out, guess what we did? We had it up to R4. Okay, this one, let me take this off because at the time we didn't have this one on. All right, right up to R4. That was our target. That's what we were looking for. And so you could see it started hanging around R4, just kind of trading crazy. Here's the 50. That's support. So, in through here, we said, okay, here, we're in another channel. And this is what the market does. And this is what you have to learn. This is how I drew the channel. But obviously none of this had happened yet. So I drew the channel just like this. When we pull back from this, this is when I drew this channel. Wasn't going to mess with anything. I think we tried to take it here for a move back, but then ended up getting out, when we saw what was happening right here. Then just kind of waited and waited and waited. But I was in another session when we took this trade. When we lost this, got in another trade, took some profit here, closed out the trade here. All right, but then again, look at what we see here. So we're looking for another move down. Okay, at this point, this has already been superseded by the 5-minute opening range when the market opened at 9:30. So that superseded. So here was a clear shot. Exactly what we look for. A clear shot. We identified this happening as it was happening, so we were able to get the best entry down to daily support, a daily pivot right here. And it did tap down to the 20, but I wasn't looking for anything else because we moved from daily pivot to daily pivot. All right, and you could see what it's done and what it's been doing. just trading in that channel. There's no clean action. So you can see there was only short spurts of the whole time the market's open that they're ideal trading scenarios, but you have to be able to identify them as they're happening. I don't know what else how else I can explain it. Is the reason, why I changed up the way I teach, changed up the way the mentor sessions are done. And yes, I'm investing, my time. There's somebody that we figured out. Now I know it's like this for a lot of people, but we figured out that he's got enough time to where he's only paid like 25 cents an hour, and it's gonna keep getting lower because of how much time it takes. You know, that's what I'm giving to you. I'm gonna stick with you until you get it. That's the rule. But you gotta understand, you cannot learn this. You can take all the classes you want. You can get all of the software that you want. But if you don't know how to determine when to stay out of the market, then it's going to hurt you. Now, what I showed you is not from a scalper's point of view. A scalper's point of view, you're going to look at things a little differently. You're going to take more trades. You're going to be active over a longer time period, but your actual trading time still will only be about 25% of the whole time the market is open. So it works either way. But that's it for today. I do have something scheduled for Friday that I'm going to share with you. I feel that it's important as well, but I wanted to get this out today. So I hope you guys have a great rest of the day. Remember, if you want to get me, you can send a message here on YouTube, or my email is in the description of this YouTube video. You can shoot me an email. I'll be glad to help you out.